And that's really been my thesis from the start when I started to really analyze data, was that we can apply similar frameworks that you would apply towards capital assets like stocks, bonds, real estate to crypto networks. The KPIs, the metrics, the fundamental analysis is slightly different. However, you are still applying similar framework. And that's what we're going to be really shining a light on through this podcast and focusing on-chain data via our data partner, Token Terminal.
CFAs, CPAs, investment managers out there, they have got no clue how to do fundamental analysis for crypto. And when you see their research reports, they're just often drawing lines on a chart and doing technical analysis to make price predictions, which they would never do for a stock or a commodity, but they do it for crypto because they do not know that there is a field called on-chain analysis. So the crypto asset class is such a niche asset class that often gets fish hunted by the traditional mainstream media. And then within that, on-chain analysis is such a niche class as well. So I'm super excited. Michael, we're finally doing this.
Finally doing it, Shiv. We are finally doing it. We're here. The Rundown, episode 1. What are your thoughts?
Oh my God. It's been a while. We manufactured so many things. We tried to make it look good, but I'm so excited. Welcome, everyone, to episode 1 of The Rundown, where we go through what is this podcast all going to be about. And today with me, I have the greatest pleasure to introduce to you a very good friend who I knew for 3 years, the best analyst that I know who does on-chain analysis for blockchain platforms, and my co-host for this podcast, The Rundown, Michael Nadeau. Michael, how are you doing?
I'm doing great, Shiv. I'm doing even better now that we've kicked off episode 1 of The Rundown here. Like you said, it's been a long time coming. I think 3 years in the making here.
3 years.
And thank you for the warm intro. I'm super excited to work with you on this new podcast. I think it's something the industry needs, and we're going to talk about a lot of sort of what the rundown is going to be, how we got to this point, and sort of give people a little overview of what to expect going forward today.
Absolutely, Michael. Why don't you introduce yourself? I can introduce you as well, but I think it's better if you introduce yourself, because this idea of the rundown actually is your idea. And then you invited me to collaborate with you, but this is your brainchild. So tell me about it, man. Just a quick intro about yourself, and then I'll go next.
Sounds great. Yeah. And hello, everybody. I'm excited to be here. So a little background on myself. Spent most of my career doing accounting and finance. Started my career in a family office in Boston. So most of my career was spent in the Boston region here in the United States. From the family office, I transitioned over to commercial real estate, and I've worked in commercial real estate for about 10 years. Started at a company called Boston Properties, which is a large office REIT here in the States with a presence in Boston, Washington, D.C., New York City, Los Angeles, and San Francisco. And I worked primarily in the Boston region. And unfortunately for me, had the opportunity to move over to MIT Investment Management Company back in 2016, 2017. And this is really where my crypto journey began, which is even though I wasn't working on blockchain initiatives when I was at MIT, I was working on their commercial real estate portfolio, but our office was on campus and we had a lot of really interesting exposure to research and the academic side of MIT. So MIT has a digital currency initiative. There's the Bitcoin Club. There were lots of crypto related conferences that were happening at MIT. Of course, our friend Gary Gensler was teaching about blockchain courses at MIT at the time. And so this is really what kicked off my intellectual curiosity for crypto. Started to learn deeply about Bitcoin back then, really just as a side hustle, nights and weekends, reading, studying data, building conviction that Bitcoin was actually something that had a lot of merit and probably was going to be around for a very long period of time. Officially moved my career into this space. I've been working in the crypto space now for about 3 years. I started with a company called Invenium. Invenium is focused on price discovery of tokenized real world assets and private market assets. So I was a director of ecosystem strategy with Invenium for about a year and a half. And I left Invenium the beginning of 2023 and went full-time with the DeFi Report, which is a company I founded about 2 years ago. And the DeFi Report is a research and advisory firm covering essentially the Web3 tech stack. And we use fundamental analysis, which is really what we're going to be talking about in this podcast, to explore how value is going to accrue through the Web3 tech stack. And we use on-chain data. We've partnered through the DeFi Report with Token Terminal, who is going to be the data provider for the rundown as well. So we're really excited to present these segments of the rundown called Going On Chain with Token Terminal, where we really kind of shine a light on what's happening with fundamentals within these crypto networks and crypto protocols. So that's kind of the journey for me coming into Web3. Shiv, we've known each other for about 3 years now, and are just really excited to kind of do this podcast with you and really educate the markets on fundamentals for crypto.
Absolutely, man. Look, that's a great introduction, and I'm glad that you did it because I don't think I would have done justice for it. So why don't I go second? My name is Shiv, as a lot of the Proof of Work podcast subscribers would know, but a lot of DeFi Report subscribers might not be familiar with me, so our combined audience. But yeah, my name is Shiv. I come from a traditional finance background. I did my undergrad in Australia. So I'm an Indian Australian, by the way. That's why the weird accent, but with an Indian ethnic outlook. So I'm an Indian Australian. And I did my undergrad in accounting and finance and had a 10-year career in traditional finance in Sydney, the financial capital of Australia, where initially I was working in retail investment advisory, moved to investor relations. And it was in 2015 that I moved into private wealth management, working for Australia's largest non-banking wealth management company. And over there, I started researching alternative assets by virtue of my job. And I got exposed to Bitcoin. Australia is one of the very progressive economies when we look at digital assets. So Bitcoin and cryptos have been legal with clear taxation and regulatory rules since 2013. And it became an alternative asset class for a lot of, you can say, risk-taking high net worth individuals. And so we used to research on Bitcoin. And in 2016, I got into the whole cryptocurrency ecosystem. So I've been in the cryptocurrency ecosystem for the last 7 years now, and, dabbled into it, researched into it, benefited as a result of owning crypto assets at that time as well. And then I reached a saturation in my career and I decided to do an MBA. And I wanted to focus on blockchain and digital currencies. So I studied blockchain and digital currencies at an academic level as part of my MBA at NYU Stern School of Business. And that brought me to the US. And that's when I started writing a lot on LinkedIn about digital currencies. Eventually, part of my research got published into a book called Protocols of Money, which was published in January of 2021. And it was around about that time that I got exposed to Michael's writings. And I was like, what a great writer. He does a lot of on-chain analysis that, especially back in 2021, nobody used to do it. So that was kind of like the genesis of how we got connected. But yeah, after completing my studies in NYU, I came back to Sydney, got involved into venture capital, became a limited partner at a Sydney-based venture capital firm, invested in 6 crypto startups with mixed success now that we've seen the results after 2-3 years. And last year I came to India, where I was born, in my attempts to give back to the community in my humble ways. So I've been teaching Introduction to Blockchain and Digital Currencies at a couple of business schools. One of them is Washington University, where I'm a chair professor of international finance. The other one is Masters Union Business School, where I am a professor of practice in crypto entrepreneurship. One is an introductory course. The other one is more of an advanced course, where I teach their respective MBA students of the business school. And started a podcast 5 months ago where I invited Michael a couple of times when he created his first Ethereum investment framework report, which is an absolute stellar of a report. And we're going to see more and more of it every quarter. And Michael came up with the idea that, dude, let's do some podcasts together. There are so many podcasts out there that just shill tokens, or they just, interview people, or they draw lines on a price chart. And then I'm like, couldn't ask for a better partner to do a crypto fundamentals podcast. And then when we started looking at the market, we realized we're going to be the world's first crypto fundamentals podcast, educational podcast out there. And given our diversity, you're in the States, Token Terminal, they are based in Europe. I'm an Indian Australian, so I've got the Asia Pacific and Middle Eastern region covered through my networks. So we kind of like are truly a global podcast when we think about it. So yeah, that's my introduction, and really excited to now kick things off.
Yeah, this is a super strategic, I think, and I think that's a great point. Like, crypto is a global asset class, and we haven't really seen this. It's sort of a new thing. It lives on the internet, and most of the providers that I work with, the clients of the DeFi report, they are very much global. I'm based in the States here, but my interactions are very much global. You're in India. Our Token Terminal is in Europe. I have somebody that's an analyst on our team that's in Hong Kong. You see a lot of action out of Dubai and Australia and other parts of the world. So it's really interesting that we have these dynamics forming. But yeah, I think, when we started to sort of look at the market and kind of what's out there, there's obviously a lot of podcast content around crypto. There's a lot of interest in crypto. There's, I believe, 400 million global, users of crypto out there per crypto.com's research. In the States, you've got somewhere between 10 and 20% of the population base that is over 18 years old having invested in crypto assets. But we have really not seen an educational resource out there that's really focused on-chain data and sort of fundamental analysis informing valuation for crypto assets, crypto networks, and protocols. And that's really been my thesis from the start when I started to really analyze data, was that we can apply similar frameworks that you would apply towards capital assets like stocks, bonds, real estate to crypto networks. The KPIs, the metrics, the fundamental analysis is slightly different. However, you are still applying similar framework. And that's what we're going to be really shining a light on through this podcast and focusing on-chain data via our data partner, Token Terminal, to deliver that. So yeah, you will never find Shiv and I shilling any assets out there. We're never going to see like a thumbnail of us, saying some asset's going to go up 100x or anything. That we're focusing on fundamentals and hopefully shining a light on, what is the future of analysis for crypto protocols and crypto networks? Because I think it's easy to take for granted the maturity of the traditional markets and some of the frameworks that have been put forth for value investors, such as Warren Buffett. We believe, these types of frameworks are being created for crypto today, and that's a role that we're happy to play in the market. So I'm curious, Shiv, what are your thoughts on just sort of like this gap in the market that's out there?
Yeah, look, if I can get $1 every time somebody tells me from the traditional finance investment management world who do not do a deep dive on crypto and just dismiss it by saying, how do you value crypto when there is no cash flow in it? That would be my second best investment after Bitcoin. So the amount of ignorance that is there with the TradFi community, it's declining since we are seeing traditional institutional behemoths getting into the digital asset space. But still, nevertheless, even some of the best CFAs, CPAs, investment managers out there, they have got no clue how to do fundamental analysis for crypto. And when you see their research reports, they're just often drawing lines on a chart and doing technical analysis to make price predictions, which they would never do for a stock or a commodity, but they do it for crypto because they do not know that there is a field called on-chain analysis. So the crypto asset class is such a niche asset class that often gets fish hunted by the traditional mainstream media. And then within that, on-chain analysis is such a niche class as well. So I'm super excited because when I teach introduction to blockchain or when I teach crypto entrepreneurship and tell my students on what Web3 skills they need in order to build the Web3 startup so that angel investors or VCs like me would invest in them, they often ask me the question that we also want to learn how to invest in crypto apart from technical analysis, because they know technical analysis doesn't really work. I mean, I'll not go there, but yeah, it doesn't really work, technical analysis. So I'm super excited. And I was just amazed that despite Bitcoin being there for 15 years, despite us seeing 2 bull cycles for altcoins, 2016, 2017, and then 2020, 2021, there are still no educational outlets over there that are teaching fundamental on-chain analysis for crypto asset class. I'm super excited being an educator that there is going to be a free repository where students and traditional finance executives both can come over here and learn from our discussion that we're going to have. And absolutely, we're not over here to clickbait. We're not over here to inform that Ethereum is going to go to the moon like a lot of hedge fund managers out of Cayman Islands do through their streaming TV channels. I'm not going to name them because I'm a professional. But we're over here to just provide our unbiased opinion on the fundamental first perspective in analyzing blockchain networks. And because of that, it was great that we found a partner like Token Terminal, because they are also in the business of providing unbiased data to people who want to do fundamental analysis on blockchain protocols. So no shilling, no clickbait thumbnails, just pure education on this podcast, The Rundown with Shiv and Michael.
Yeah, and in terms of like timing, I think our timing here is pretty good because we think that crypto is sort of getting close to that sort of like turning point where you start to see regulators come in, you start to see, I know in the US, like Congress is looking at this industry, trying to come up with new rules and regulations. And so typically when you come out of that period, that's when you've achieved a consensus in the market. I don't think you'll see as many people having the opinion that some of these things are like Ponzi schemes, or, Warren Buffett won't be calling, Bitcoin rat poison squared and things like that. Like we're sort of getting close to moving away from that. And that's what we're here for. That's a lot of noise, right? We view this space as being extremely noisy because you do have these high profile people that have been punching down on crypto for many years, and it's sort of confusing to us. But we've always focused on the data to sort of just block out the noise. And that's really what this podcast is going to be anchored to. And the other thing that we believe is that crypto networks offer transparency that you don't get in private markets. So if you're an investor and you're investing in private assets, private equities, you are not going to have as much transparency into those investments as you're going to see as we start to analyze some of these protocols and their business models using fundamentals. You're going to see that this is real-time data, really transparent. This is a tool for regulators, we believe, tool for law enforcement. And so we want to shine a light on this as well through this podcast.
Amazing. Now, in addition to what you've already said, what are the other topics that we're going to cover on the rundown, Michael? Because I know that you got a list. Tell me that list.
Yeah. So I've done a lot of writing on these subjects, through the DeFi report. That we've got about 2 years worth of archived newsletters where we essentially use data to go through a lot of these core topics. However, in written word, there's not a ton of nuance that can be explored. And so a lot of these discussions are going to be around a lot of the nuance that you can't really address in some of the writings. And I put this Ethereum investment framework out there to sort of provide somewhat of a guide where you can really get somebody up to speed pretty quickly on the core concepts that need to be understood first. So we're going to talk a lot about these core concepts related to, open source technology, Metcalfe's law, Moore's law, like how important network effects are. There's a lot of different, there's layers of the tech stack, and there's value that's sort of moving through the tech stack. And that's all evolving as the ecosystem matures, as layer 2 networks gain scalability. That sort of changes the potential margins of layer 2 versus Ethereum and value capture at the Ethereum validator level. So we want to talk through all of these various really important concepts to understand first. And then we're going to get into on-chain data, fundamental business model analysis. We're going to go through all the various KPIs, the metrics. How do we think about valuing a layer 1 network? How do we do relative comparisons between various layer 1 networks? What's the difference between Bitcoin and Ethereum? How should an investor be thinking about these things? How would you compare DeFi protocols on a relative basis? How would you compare, NFT markets? What are some of the emerging use cases that are happening on public blockchains, and how do we know they're emerging use cases based on what we're seeing on chain with the data? So these are some of the key ideas that we're going to be exploring. Token Terminal is going to be providing a lot of these insights. We're going to sort of show you how to use a tool like Token Terminal to get this fundamental analysis that can then inform potential portfolio construction and a thesis, a high-level thesis for Web3. So super excited to get into a lot of this with you. I think we're really well set up. Your background in traditional finance, my background dealing with data, finance, and accounting my entire career. Just taking some of these concepts that I've used throughout my career and then just sort of applying them to a new data structure, a new asset to analyze, but from a very high level. I think we're going to be able to meet traditional investors sort of halfway with frameworks that they're familiar with by introducing these sort of new KPIs, metrics, those types of things. So super excited to get into a lot of these topics. Each episode, the rundown is going to be a weekly podcast. We're going to release this on Fridays every week. We will be talking about interesting things that are happening in the markets. And then we're going to have these segments where we go into the deep dives of various business model analysis, value accrual through the tech stack, et cetera. But yeah, super excited to get into this with you starting next week.
Absolutely. Absolutely, brother. Yeah, look, I wrote a book on the history and evolution of money. So I know a thing or two about capital markets and how the concept of money evolved. And money is always evolved when we have identified, as a consensus society, have identified certain limitations of the incumbent. So, we went from, initially back in the BC era, people used to use, there were some civilizations that used to use dog's teeth as a method of accounting. Then we had the Bronze Age, the Iron Age, the Bronze Age. When Silver Age came, people started using silver. Then eventually it was in the 18th century that people started using gold coins universally, especially in the US with the act that they had. So gold was eventually used. And then we had, the gold-backed system. And then when we had the Great Depression in the US, people realized the limitation of having that system, that the monetary economists couldn't be flexible and couldn't get out of it. So as we all know, the US president of the time, got everybody to transfer all their gold. So no more gold convertibility if you go to a commercial bank. And then we had the Bretton Woods system. And then in 1971, Richard Nixon, our president, the US president, decided no longer a gold system at all. We're going to go to the fiat system. And it's very important that people realize that, because a lot of people in a lot of countries especially think that the monetary system that we currently live in is like the 10 Commandments. Like, it's only 52 years old when you think about it, the current monetary system that we live in. So for a lot of people to think that there is no way this can be updated because this has always been the case, they couldn't be more wrong. And it just helps to go back to the first principles, go back to the history. And to me, we've reached a point where the fiat monetary system, irrespective of the country that you live in, have reached a point where it's highlighted the problem that it creates eventually with the inflation, the problem that it creates with the whole debt creation. And so while I'm not advocating in any of my podcasts or any of my media appearances or any of my educational classes that crypto is the replacement of the traditional financial system, but what I do believe is that it's a good experiment in the whole scheme of monetary system. And when I look at it, there are only a handful of assets that I see having the capability to replace some of the monetary assets and also to invent new form of assets, such as we've seen with NFTs, such as we've seen with so many other DeFi protocols that have been invented on top of the Ethereum blockchain and other layer 1 blockchains. So not only are these digital assets a monetary innovation, but it's a technological innovation as well. And so many people dismiss it just because it's got a speculative element to it, and the industry has basically failed to self-regulate themselves and concentrate on the casino gambling nature of it. And that's where we come in. And we are going to come in week after week. So if you want to get news on whether Dogecoin is going to go to the moon, we're probably not the podcast to follow. If you're wondering whether we're going to give you crypto tips on what's the next crypto to invest in, this is probably not the podcast to follow. But if you want to be one of those early financial professionals who want to go deep into the fundamentals, first principles analysis of these blockchain protocols, follow us. That's basically it. And we're going to be consistent week after week, Michael and I, every Friday.
Yeah, that's super well said, I think. The other thing worth mentioning is like we're going to be talking about a pretty wide range of topics that are sort of tied to crypto, but crypto has many, many elements to it that sort of you have to bring all of this together. There's game theory with crypto. There's geopolitics and politics. There's understanding history, like you mentioned, like deeply understanding history, and that just because we've been living in a system for 50 something years, like, you know, history is pretty long. Things have changed many times, and there's a reason for that. So we're going to be getting into all of these interesting topics related to crypto as well. And then also anchoring to like, why are we here? What is the fundamental breakthrough in computer science that makes these things worth having fundamentals, worth analyzing, right? There's a breakthrough, there's a progression in terms of how the internet is progressing over time. What is the fundamental value proposition of these networks? And so we're going to be talking a lot about that too. How does this fit into just the natural progression of the build out of the internet? We think there's a story to tell there. And this helps, I think, anchor people and have conviction to why am I here? Why am I spending time in this? Why is it important to do this fundamental analysis? Well, these things are really important. And we think they're going to be around for a really long time. And we're incredibly early in this process of really deeply understanding them. And so that's what we want to uncover. And we hope we can become a valuable, trusted resource for the viewers and listeners.
Absolutely. And absolutely, we are so early. The first stock that got listed on exchange was in 1600, the Dutch East India Company. And we didn't see frameworks to value stocks until hundreds of years later. I mean, SEC in the US was formed in the 20th century, for God's sake. And
after the Great Depression, yeah, not till the 30s.
Yeah. So this is an ever-evolving field. And one thing to note down is, and I used to hear this criticism a lot, in addition to how do you value crypto? There is no cash flow. And I was like, there is cash flow. Ethereum generates fees. So there is cash flow. You just need to look at it differently. You can't look at it as a company, like how you look at it a company, but there is cash flow in protocols, and that's what we're going to deep dive into in our weekly episodes. But just quickly, the other point that people often make is that you come up with these analyses, but you are wrong, because sometimes you say that Bitcoin is going to go to $100,000 according to this framework that you suggested to us, but now it is still not at $100,000. Well, people are evolving frameworks for traditional stocks for hundreds of years, and they don't get it 100% right as well, including Warren Buffett. Warren Buffett has invested in IBM, and that was a loser stock for him. So to suggest that if somebody comes up with a framework and they suggest through applying that framework that this is how the price would follow, and if it doesn't follow, that we should reject that framework, is just super biased, because there is not a single stock evaluation framework out there, whether you are a CFA, whether you're an MBA, and I'm an MBA, so I know that. There is no 100% success rate framework out there for any asset class. If there was, then that person would be richer than God. And there is nobody richer than God, or there's nobody richer than Elon Musk who's not into the stock market.
Yeah, I totally agree. I think like you're hitting on something which I think is probably going to be something we come back to many times in this podcast, is that in many ways, like valuation it's a moving target. It's really a social construct when you really get into it. This is not a science. Like we've come up with this idea of like Warren Buffett and value investing. That is something that became a social construct because of the success that Warren Buffett has had in his career. It really birthed like an army of people that follow that type of framework, and that's sort of become like a norm and a consensus on how to value certain types of equities. We think that these types of social constructs will emerge in crypto, and they are constructs. There's nothing scientific about them. There's always going to be assets that become wildly overvalued. There's going to be new ways to think about value. But we think that the way to think about crypto is not necessarily the same way as traditional equities. However, the framework through which you can do that is really what we're here to talk about. We're here to sort of set the foundation for, so that people can have conviction going forward, like how to do this, and that there is absolutely fundamentals and data points that we can point to say, hey, this one compares to this one slightly differently, and this one's valued here, this one's valued there. This may be why the market is thinking this way. And then that becomes, over time, maybe it becomes a social construct that becomes adopted by the investment community. And so I think that's sort of where we're at. We're super early in this journey, and we're super excited to be sort of at the bleeding edge of this going forward. So
absolutely. And just on valuation, I'll just say what the great Professor Aswath Damodaran of NYU Stern says, who's often termed as the dean of valuation. Valuation is a craft. And like Michael said, it's both art and science. So it is a craft. And yeah, there is no one way of valuing. There are multiple different ways. And even if you have one way, no valuation framework has got a 100% success rate. So just pointing it out there in our first episode before we do our weekly episodes, and people are like, they said it's going to happen this way, but it didn't happen. So why not? There is no valuation framework for any asset class, even for real estate, that has got a 100% success rate. And we are here to provide.
Yeah, and I'll just raise my hand. I'll raise my hand right now to say we're going to get a lot of things wrong, but we're here to essentially provide the frameworks and point people to data.
Yes.
As sort of the starting point, right? That's sort of the way we think people should think about this. We're going to look at the data first, then that informs our strategy. Shiv and I are not really part of, like, when you go on crypto Twitter, you will see almost like these tribes, these blockchain tribes, and they're almost like religions. And, they fight with each other. Each Solana's fighting with Ethereum right now. Sometimes you'll see Bitcoin fighting with Ethereum. We don't get into this. We just sort of look at the data, and like, to us, that's like the noise of crypto. That's an example of the noise in crypto. And, we just sort of look at the data and let that inform like how we think about things. And then you look at the psychology and the sentiment in the market, and you say, okay, there's a gap. And that's sort of that's like the framework that I like to apply towards investing in crypto. And we're going to share a lot of these types of insights with the viewers here.
And we've got the best on-chain data provider to leverage it.
That's it. I think that's a great place to end the first episode. I'm super excited to get into the actual details starting next week.
Amazing, brother. So thanks a lot, guys, for tuning in to the first episode of The Rundown. I hope this dialogue between me and Michael gave you a gist of what to expect on a weekly basis on The Rundown with Shiv and Michael. We're very excited to do this. Whether we get subscribers or no subscribers, we're just going to keep on doing this week after week, because we're entering the next crypto bull cycles. And if history has showcased us anything, with every crypto bull cycle, we suddenly see a rise of crypto experts who suddenly come up with these predictions of what the next thing is going to go to the moon. And at least now you're going to get a channel where you're going to get data-driven, fundamentals first, crypto finance knowledge. No shilling, no astrology-driven prediction, no prediction because my gut is saying, or because I got some news from a little birdie kind of thing, and that actually happens after 2 years. Nothing like that. Fundamentals first on the rundown.
That's it. We'll see everybody next week.
Amazing.
Thanks, Shiv.